Well, central banks have been a dominant theme of the past few years of trading, and it looks like 2025 is going to be decided by them as well. So hi there everyone, welcome to the Traders Circle weekly market update. It's already Tuesday the 9th of December 2025, and before I start, you do need to be aware that whatever I say is general advice only. Today we saw the Reserve Bank of Australia leave the Australian cash rate unchanged at 3.6%. This was no surprise to anyone, and you read any of the newspapers, any commentators, or look at financial markets, it was pretty much guaranteed they were going to hold at this event. Obviously, they've delivered a few rate cuts this year, but it's starting to look like we might be at the end of the rate cutting cycle. Now, if you'd read the RBA statement today, you'd probably have no clue over what they're going to do next, and I suspect that was intentional. They tried to be as vague as in their wording as they possibly could. They refrained from using any sort of wording around potential tightening or interest rate rises or anything like that, and I think that was very deliberate. But if you probably drilled a bit deeper, I think you could assume that the next move might actually be higher in interest rates. I wouldn't rule out a rate cut early next year or at some point next year, and the RBA certainly didn't rule one out either. But a lot of the wording talked about the risks around inflation, how recent inflation was stronger than expected. They thought that that might only be temporary, but they couldn't rule out inflation making a comeback. And all that sort of talk about high inflation, that's not really congruent with rate cuts. It's more congruent with rate rises. And like I said, like they said, if inflation does keep rising here, they'll have no choice but to lift interest rates further. Hopefully they were right about it being a temporary thing, but it's obviously impossible to say. We've had a period of higher inflation now, and that comes after a period of inflation not really falling either. So, here in Australia, the RBA holding is not a surprise. It's one of the big reasons our market has underperformed over the past couple of months. The question is going to be whether we're going to see the next move is higher or lower. We're not going to have any idea over, which one it's going to be until probably the first couple of months of next year. So, the RBA not going to do anything for the next couple of months. They'll be looking at the data, probably now waiting to see fourth quarter Australian inflation. And I think that's not out until very much at the end of January or very early February. So, nothing for the next month at least. And even a move in February is looking very unlikely. Whether or not they move in March is going to come out to the next few months of data. So the RBA held, unsurprisingly, and the fact that our move is uncertain is why the Australian market has been so weak compared to the US market. The US market has pushed back towards the all-time highs, or their all-time highs, because they're expecting a rate cut tomorrow night. The financial markets are pricing in about an 89-90% chance of a rate cut at the meeting. I would suggest that they're going to see a rate cut, that's a great thing for them. It's pretty much the reason why they've pushed back towards their all-time high. It hasn't been enough for them to break into fresh all-time highs, however. And I think one of the reasons for that is it's pretty clear that this might be the last, or it might be one of the last rate cuts this cycle. So you do have to keep an eye on this meeting. If they do cut rates, I suspect that'll be more negative than if they don't cut rates. If they do cut rates, this could be the last rate cut we see. And if they don't cut rates, much more likely that they cut early next year. So if they do cut rates at this meeting, this could be the end of the rate cutting cycle. They're probably going to say in the words that we'll wait to see what happens. And US inflation is also pushing back up. It doesn't support, in my opinion, a rate cut tomorrow, even though they will get one. But doesn't support multiple rate cuts from here. Absolutely not. So my assumption would be if they do cut rates at the meeting, it's probably going to be more negative afterwards. You've got US markets at all-time highs. You've got their valuations at extreme levels. And if they do cut rates in the face of their rising inflation as well, it's going to be pretty clear this could be one of the last ones. So I would suggest that, a bit of buy the rumor and sell the fact perhaps at that meeting. Now, that view that it could be one of the last rate cuts, that is complicated a little bit by the fact that Fed Chair Jerome Powell is resigning next year. and will be replaced by a Trump appointee. Now, Trump is obviously going to appoint one of his guys, probably a yes man, and Trump's made it pretty clear that he wants further rate cuts. So if he just appoints someone who's just supporting rate cut all the time, that could make things a little more uncertain next year as to the path of US interest rates. What will be certain, however, is that would be a terrible decision to appoint a yes man who is gonna basically give the unnecessary rate cuts that Trump wants. Would be terrible for the US economy. I mean, I think it's pretty clear things are headed a bad way there anyway, but that would only accelerate their collapse. So the question now is this the end of the monetary easing that we've seen around the world? It looks like, in Europe, they've basically reached the end of their rate cut cycles. Here in Australia, we might have reached the end of the rate cut cycle, and the US probably should be reaching the end of their rate cut cycle. Although, like I said, if Trump appoints a yes man, things could be thrown out of whack there. Global markets have rallied for the past 2 years based on, one, US government money printing, which is going to continue, but two, it's rallied based on the continuous rate cuts we've seen in the Western world. Those rate cuts are starting to dry up. Almost certainly they're drying up. And inflation is returning. Inflation's sticky. It didn't get back to the target range of the central banks around the world, and now it's starting to push back up. I think the justification for further rate cuts is drying up, and that really removes one of the bullish drivers for markets that we've seen over the past few years. So I do sort of want to ask the question, will 2025 be the end of the bull run? It started in October 2023. It's been 2 years. It started with a pivot in interest rate movements, and now it might end with the pivot in interest rate movements. I do think that we're likely to see maybe another push up from the US market, or at least a hold near the highs, maybe a little bit of a push up from our market. But I do think that further gains from here are going to be pretty small, and at some point we could see a pretty substantial move to the downside. So let's have a quick look at the charts and see if they tell us anything about that. This is the Australian market. We've really fallen quite strongly since our peak in October. That coincided with some stocks going ex-dividend, and also some pretty bad bank reporting from the biggest sector on our market. Those banks haven't increased their earnings for a few years now, despite a big jump in share prices. Our market fell about 8% to 8,400, and then we bounced back to 8,650, which we've held as resistance. We've really tracked sideways for the past fortnight. We've failed to push below about 85.70, and so we've been in a very, very tight sideways range for the past 2 weeks. Given the hold from the RBA today, if we see a negative response to the US Fed meeting tomorrow night, I suspect we will break lower, and I'd be looking at least 8,400, possibly a correction move towards 8,250. If US markets set a fresh high after the Fed meeting, that's where we might break higher, back towards maybe 8,750, maybe 8,800 at the 50-day moving average, maybe back beyond that, maybe higher than those levels. It's a little bit uncertain at the moment, but I think our market is primed for a fall, just waiting to see what the US markets do to decide whether or not we do fall. Alright, and here we have the US market, the S&P 500, and we can see that it has climbed back to the all-time high across the past fortnight, roughly 6,900. They have been a little bit higher, but not notably higher. 6,900 index points. If they can break beyond that with the Fed meeting and set a fresh all-time high, hard to say where they might head, but 7,000, nice round number, that could be the upside target. If they do see a bit of selling after the Fed meeting, and I do note they showed a bit of a bearish signal overnight, the first target would be roughly 67.50 here, previously resistance, also a bit of a gap level, and if that breaks, they should come back to about 65.50. A break below 65.50, and it could be on for young and old. I would imagine that would come if we are witnessing the end of the rate cutting cycle. So we'll wrap it up there for this week, guys. We are waiting for the Fed meeting on Wednesday night, Thursday morning Australian time. After that meeting, I suspect we're going to see a directional breakout for US and Australian markets, and that's how we'll be trading into the end of the year. So hopefully you guys enjoyed the video. If you did, click like, click subscribe, and we'll see you in the next one.